Ooh, good one here. Why we'll never see 1970s style inflation again. Plus a dividend stock to buy as a bond substitute. All right, I'm not sure we'll get that part, but this is from the Globe and Mail out of Canada. Blame Canada! And I'll probably get copywritten for that, saying blame Canada! Because my voice is so similar to South Park. I actually just got a copyright strike because a lady who's at Big SJW, I'm not going to name her here, but I showed her wage. Man, so chill. Let me read this first. I showed her webpage, and I called her. I said, "Hey, why are you going after a Yugoslavian immigrant who survived commies? Why are you going after her, making crap up about her?" And she didn't like that, so she gave me a copyright strike. And you can challenge them on you. I'm done. It's whatever. I'm like, whatever. Take down the video. I don't care. It's all good. I just find it funny. We're getting under the skin. The SJWs. I tell you, you got to fight back, man. The SJWs. Can't let them just run rampant. You got to make them on defense. You got to go on offense. That's why you follow people like Clay Travis, Turtle Boy, me. There's a couple other guys out there. I'm drawing a blank. That's why you follow these guys, man. Curtis Stone, because they're not like, oh, don't call me racist. They're saying, no, we're fighting back. Okay, so let's read this. Published 2 days ago. I was catching up on financial podcasts this week, and I found a great one. And this is the, what was it? I just signed up this myself. It's called, I couldn't do it on this website, the Bloomberg Odd Lots Program. Macquarie strategist Victor Chavez explained why predictions of the 1970s style inflation are based on outdated economic models. I agree. Not only will we not see runaway inflation in the shorter term, he believes deflationary forces will take hold once again in the coming years. I'm going to show you some supply chain stuff here in just a sec. Maybe a different video. Inflation is the result of supply constraints. Where have you all heard that for? Inflation is the result of supply constraints. Not too much money chasing too few goods. Yes, but the part of that isn't the too much money, it's the too few goods. I cannot stress this enough. Shortages of labor and products that result in bidding wars and higher prices. Mr. Chavez believes these are a thing of the past as developed world economies move away from basic manufacturing. Talking to a lady the other day when I was down to see my man Ron and I was in the army with and outside of Savannah, and they're like building 3D homes now, those tiny homes, these little homes, but they're printing 3D printers. I was like, how does that even work? And apparently they got some crane. I said, whoa, it's freaking nuts, man. That's not inflationary. That's deflationary. Ron works for a company where they do drywall. And his biggest thing is freaking finding employees. And employees, employer, and labor is always and everywhere the biggest expense for a company. If you can't find employees, A, you're gonna have a supply shortage. B, to find more employees, you got to raise the prices. I hate to say this, but if you have a machine that can print a house, even though it's a small house, 3D print, a skill set would be, I guess that'd be computer aided design, CAD. I don't know how that works, frankly, but I know there'd be 3D printing would be a supply set a knowledge set you'd want to have, a skill set, I should say. And he was just telling me, I was like, whoa, you think that could happen? He goes, yeah, but what they'll end up doing, even on like, stick-built home, well, it won't be stick-built, like a house like this, instead of just tiny homes, they'll build 3 spot right there. They'll bring the crane there, print, combine together. That's not inflationary. No way, no how. Now, if you can't find the lumber, well, you find how you find the lumber. I mean, again, so you think there's not businesses saying, how can we avoid the lumberjacks? And I mean, look, I'm lumberjack. I'm from Maine, for heaven's sakes. But if you can't find the people that can chop down the trees and mill them, well, you're going to find another way. I mean, people don't just say, oh, no, there's a problem. Sorry, we're stuck. There's other ways. What else was he telling me about, actually? It's interesting, too. He's saying something about not drywall. I forget. Maybe it was Simon from, he was talking about OSB as opposed to plywood. It was interesting. Anyway, all right, let's keep reading. And the strategist notes that 60% of the U.S. private sector economy is now made up of intangible assets. Intangible. Unlike plant equipment and machinery that make up the bulk of wealth in the past, intangible assets are intellectual properties like software, patents, trademarks, databases, brand equity, and even vaccines. In the old assembly line economy, demand that exceeded supply and price increases could only be solved slowly, with huge investments in constructing new factories and hiring workers. Intangible assets like software and pharmaceuticals do not require this investment, and therefore price increases are rare. Yeah, I'm not so sure about pharmaceuticals there, buddy, but we shall see. The labor force is also far more flexible now. Between 20 and 25% of the labor force is now employed by the gig economy, and Mr. Chevet sees this as preventing wage inflation. In the modern economy, the workers that drive for Uber, for instance, will gravitate easily to sectors requiring increased production. This will make labor shortages and the worker bargaining power to create sharply higher wages more rare than in the past. I don't know about that. That seems like a bridge too far for me. In the modern economy, the drivers that work for Uber, for instance, will gravitate easily to sectors requiring increased production. This will make labor shortages. I don't know if I buy that. That seems like a bridge too far. But anyway. This guy also notes that the benefits of intangible assets spread throughout the economy. Not only will software companies never experience supply constraints, software companies won't experience, semiconductors, right? They're under supply constraints right now. The products they sell used on factory floors, making production more efficient and less dependent on human labor. Well, I agree with that, but the idea they'll never experience supply constraints, huh? Current government fiscal spending is expected to cause inflation, but Mr. Chevet believes it will result in the reverse, deflation. As an example, he notes that investment in renewable power will eventually result in lower crude demand and a lower commodity price. No, it won't. Well, it won't. Again, Mr. Chevet, tell me how many freaking solar panels, how many PV panels, and we'll just use a good old-fashioned run-of-the-mill 300 watt, we'll even say a 25% efficiency, which you're not getting on your roof without a significant cost. But let's just say 300 watt, 25% efficiency. How many of those will it cost? Will you need to create one solar panel from scratch? Just answer me that. The idea that renewables are deflationary on energy costs, so that's just silly in of itself. It's just dumb because we still have battery power. We still have to get the solar panels. Solar panels aren't a fixed good. They do wear out. I think the average like 11 years or something like that. Turbines are falling across all over the place. And they don't generate that much energy as it is. We just don't. We know this, man. So I don't believe that for 2 seconds. But anyway, that's interesting. So, all right, cool, man. And then stocks to ponder. He says, freehold royalties for cautious investors. This security may represent a defensive way to play the energy rally. It offers a 5.3% dividend yield along with a forecast price return based on consensus analyst estimates of 16%. Management has announced dividend increases with the release of the quarterly earnings for the past 3 consecutive quarters, yet the payout remains quite low. No, well, that's pretty good. I'd not recommend you buy it, but that's of interest to me. Freehold royalties. What's the Gordon Pape says he considers this dividend-paying stock a bond substitute. Amera Inc. Its business is primarily in regulated electricity generation, electricity and gas transmission and distribution. It's not exciting stuff, but the company's about as stable as you can find. Man, let's look those up. All right, cool. And we'll come back around. Thanks now.